Okay, good evening, everybody. Hope everyone's okay. Hope everyone is good. I mean, it feels like every time we start one of these, it's always a sharp intake of breath as we have to kind of reevaluate not just the crypto space around us, but, in this week's edition, the geopolitical situation that we have. The long forecasted, very well signposted conflict, war, I'm not sure what we're calling it, but armed scuffle, certainly, between the United States and Israel and then Iran has obviously kicked off over the weekend, which has obviously caused all sorts of ramifications, not else foremost geopolitically, which we are going to try and stay and avoid because I am no geopolitical expert, certainly not within the Middle East. And to be fair, we have our own war correspondent, there's Bijan, that I don't know where he finds the hours in the day to post all the things he does post in Discord. But there it is. I think he's probably keeps better up to speed. However, we will try and talk about what this may do to the markets, where the markets may go from this, and where that turns to play out. And obviously, there's a lot of speculation within this, not foremost because we actually don't know how long this conflict is going to take. The 4-day window is pretty much blown out of the water, talking 4 weeks. And then, where else are we going to go from that one? So obviously, we're just going to have to be reactive. We're going to have to respond from that. But ultimately, this, unfortunate situation that is occurring provides volatility to the market. That volatility can be traded. And we're all in the, in the arena, if you will, to try and make some money. We don't do it all the time, but we are trying to do that. And so there will be opportunities for that to present ourselves. Maybe not solely within Bitcoin, but that's where the sort of the trading instinct of us all just needs to sort of take over and decide whether or not we want to have a look at other avenues. So we will have a very brief discussion about that. We're going to try and focus more on the markets. Then we'll get into Bitcoin. We're going to look at big picture. We're going to look at obviously how things are happening on the smaller time frames as well. We'll cover some of the more popular altcoins out there, and then we'll try and wrap it up. Leeds United on the telly. In the background, it is muted, so I won't know what's going on whilst it happens, but it'd be great to catch the end of the game if I can. Without any further ado, then, let's just jump into the charts. 3-day time frame Bitcoin at the moment. And what I will say, before we start giving Bitcoin a bit of a kick in, it's held up surprisingly well. I mean, who thought that this would be where we are, just shy of 69,000, when the market opened this week, given what happened over the weekend? I knew there would be some volatility, but I expected Bitcoin to potentially crap the bed a little bit more than it has, but it has shown some surprising strength. And the point being that, yes, we are still within this range. Yes, we have fallen from considerable highs of the all-time high. But for the last, 3-4 weeks, we have just been able to maintain 62 to 72,000 and not even a conflict in the Middle East. And let's face it, from the reports that we're getting out there, Iran is just taking no prisoners in terms of you help the US, you help the Israelis, you're getting some drones sent your way. So it is a Middle Eastern war for all intensive purposes at the moment. And as I say, Bitcoin has been able to just hold on to the range that it's been in. We've seen other asset classes fall away, particularly the precious metals, which is a surprise, and we'll have a look at those in a moment. But actually, Bitcoin able to hold its own. If we just blow Bitcoin up, poor choice of words there. If we zoom in or enlarge the chart, I think is perhaps what I was trying to say. And we can kind of see that actually this is the latest candle at the moment is still got a day and a bit to go. But it is trading positive. Effectively, yesterday, the market opened. We retested 70,000. We did have quite a drop today, but actually this afternoon with the USO markets opening, Bitcoin has recovered pretty much all of the losses it made from this morning's drop. And we're at the top end of that range. Now, when we zoom down onto the lower timeframes, we can have a look at what opportunities that presents. If we're going to stay within this range, we're at the top end of it. There's an argument to be said that actually maybe we should be looking for some short-term shorts. And we'll have a look at some of those later on. But right now, it's just minding its own business. Very similar to what we had back here. Now, this was 63 days. This was 9 weeks worth of sideways action. At the moment, we are not quite at that stage. We are 27. So just about 4 weeks. So we, you know, if we were to base it on that, we still got double the length. But ultimately, we've found the two ranges we found ourselves and we're moving sideways. Does it look particularly pretty? No. It obviously has warning signs within this. Potentially bear flag, bear pennant, a bearish rectangle, whatever you want to call it. The fact that we can't seem to get above 72,000 is a point for concern. But we'll have a look at those a little bit later on. But as I said, whilst we're in the range, opportunity is present. Looking at Bitcoin dominance, now this has shot up. And at first I had to do a bit of a double take because it was quite a move up. But actually, as I said, when you look at it, last week, when you look at it against USDT dominance, and we can actually see over the last candle, this has fallen away, hence the climb there. But with exception of some altcoins, generally altcoins have moved with Bitcoin. So the main difference being felt at the moment is the use of USDT on the sidelines coming back into Bitcoin and also altcoins as well, fueling the rise that they have had over the last 24 hours or so. That being said, when we get into total 2, very similar picture to what Bitcoin is doing. We're inside of this range at the moment. Yeah, from a long-term point of view, it is looking weaker just because we're significantly near these lows down here, but still moving out sideways. I did say before, there is still this more distinct W formation. It looks better on the 1 day, I should add. But until we break this waistline of, let's just call it 1 trillion, for me, it's just sort of, working within that range, bearish pennant, rectangle, whatever you want to call it. But I acknowledge that there is the presence of a double bottom, but until we break the waistline of $1 trillion, we're just gonna have to wait and see on that one. So that's where that one lies. And then we get on to BitTenter itself. And I still don't think this particularly looks great. I will say that in the last week since I spoke on Tuesday, it has had a fairly decent move up from about 160, getting into around about the 195 level. It has pulled back ever so slightly since then. But this is making, at least on the short term, higher highs and higher lows. But in the grand scheme of everything, it's still within that downtrend. So not looking to get back into it, not really looking at altcoins in general, unless I'm trading them. And so that's where we sort of see that. We're going to go into much more detail on a lot of these later on. I see that Bijan's in the chat. Our war correspondent is here. I imagine he's got 15 screens in front of him. Twitter's going down one, Sky News, GB News, whatever, down all the others. And then I'm just on his little iPhone or something like that. But good to have you here, Bijan. Keep up the great work in Discord with all of those stories, posts, whatever. It is a roller coaster to read, I'll be honest with you. Now, I'm not actually going to go through this article here. I just thought I'd have it on in the background whilst we talk about what is going on. Because ultimately, I suppose the real question is this conflict, war, whatever we're calling it, is this good for Bitcoin or is this bad for Bitcoin? And where do we really see that going? Now, typically you would say, okay, a conflict, particularly a protracted one with the US involved, is ultimately going to be negative for the vast majority of risk on assets. There will, of course, be exceptions to those, particularly defensive stock or defense stocks, healthcare stocks, stuff like that. But ultimately, it's not a particularly positive thing, especially if they drag on. But the markets do, they do want certainty. So once they understand what this conflict is and where it's going to go, that will give them some sort of direction. But what we normally see is, why does my face always disappear? Just there we go. What we normally see is the dollar to rally, oil typically to rally, and then we see risk on assets, such as the stock markets and Bitcoin, ultimately fall. Now, if we actually start to have a look at what has gone on, and so we've got the NASDAQ open at the moment. We're going to have a look at a few of the other ones here. Let's just try and put it on the hourly, I suppose. Let's get rid of these as well. Don't need the EMAs right now. It's Tuesday, Thursday, that's fine. I'm just trying to find, here we go. Obviously there's a big gap. So Friday, and then we get Sunday. Okay, so we had this gap down. Initially overnight, the markets moved down, but ultimately, what the real surprise was we had this move down, and then everyone just thought, right, well, US opens, this is just going to continue to fall, and you know what? The exact opposite happened. We saw incredible, a fairly good rally recovery of that, closing above the openings, obviously closing the gap as well, and finishing on a green day. Markets close again, Asia opens, we see this fall away, and then what happens? Another double bottom pattern, and then we see this rally up. Now, it hasn't been as aggressive as what we saw yesterday, but don't forget, whilst we're still trying to understand the time frames for what's going on in the Middle East, there was some economic data that came out yesterday which helped provide a bullish narrative. And for those that are big for the ISM 5-year cycle, etc., business cycle, it was all about the ISM manufacturing PMI, because that came in again above 50. It actually came in at 52.4, which is slightly less than the previous month, higher than the forecast, but most importantly, it was above 50. So remember, for this, very basic, below 50, generally, economy's not looking good. Above 50, economy's looking good. Risk on assets should do well. And for those that buy into Raoul Paul's point of view, then, Bitcoin only really pumps when the PMI is above 50 and continues to climb. This is the second month that it's climbed. So that came in at 3 o'clock our time. And, look, 3 o'clock, 3 o'clock, we start to see the massive pump up. So that helped elevate the move there. Not to mention the fact that, and I think I mentioned this about 4 times in Discord, I was expecting volatility. I think ultimately that is what we're going to see over this week. We're going to see volatility with a general continuation of whatever the trend may be. Now, unfortunately, for the likes of NASDAQ and the S&P and some stocks, it is that non-directional volatility. We are just moving up and down. Now, whether that is because big players are just moving the market up and down so they can exit positions before a big crash, we will have to wait and see. There's certainly arguments to be said for that. We talked about that ourselves, thinking that may well be the case. But right now, the trend, unless something significant breaks, I would expect just to see, certainly for the NASDAQ, the S&P, for the trend to just basically move sideways. The volatility, the non-directional volatility to continue. We'll wait for it to come back down. And we can start now to add these things here. Actually, we are on the daily, 200 EMA here. I mean, we start losing 24,000 on the NASDAQ, then we can start talking about, okay, are we going to be, sort of having that correction? Because ultimately, 20,000, I mean, it would be just a break of the 200 EMA, but you can kind of see, if I actually had this, yeah, don't know why that's orange or checkered, but there it is. Nope, don't want it red either. You can see the 2 previous touch points on this here, back in October and then back in November. And then a break of that, we will have to accept that we're probably in some form of correction that's going to go through. Now, let me change that back again, otherwise I'm going to be stuck with red lines. There we go. The S&P is looking no different, really. Not as close to the 200 EMA on the daily time frame, but still that sort of non-directional volatility that we've seen. But also with that last 2 candles, remember this is the daily time frame. Big green candle yesterday from the opening, and then today we've had that big sell-off relative down to 6,700, and then we've actually recovered the vast majority of that. Still hasn't closed green for the moment. We've got about an hour left of play, but not too bad a looking candle. I'm not really going to say, oh, it's a low test, this thing's going higher, because we've just ranged sideways for pretty much 4 months now, but it is looking that way. But one of the things that I think has slipped a lot of people's mind is just the dollar. The dollar, do you remember back in end of January when we broke 67,000 or whatever? Sorry, 67. 96. I don't know why I said thousands, just because I can see the dots there, but 96. And we thought, right, this is it, it's going down. But there was that trend line I have on the other chart going back from 2008, and it was kind of like that. We've just picked it up and we've recovered it again. And I stand by the fact that Trump and the new Fed chair, they both want a strong dollar. And then what has happened over the last couple of days? Those investors that have decided they don't want to be in risk on assets, they're moving to the dollar. Okay, that's just a standard reaction there. The dollar strength has increased. It got almost back up to a parity at 100. Not quite the case there, but I would imagine to see this just continue to build whilst we're starting to really understand the timeframes for this conflict. And sort of, I don't want to necessarily say who's winning, but just how it's playing out. Sort of the news that's been fed, or just, I suppose, how dug in the Iranians are versus sort of, how successful these strikes are at diminishing their military capability. I suppose I'm really kind of choose my words carefully here because I just, I'm no real expert on that. One thing that was quite interesting today was the VIX. So when it's high, you buy. It didn't quite get to 30, but look at the level it got to. And I'm gutted because I drew a chart all about this earlier on. My computer sort of like switched off. Well, I switched it off. I didn't save it, but I had this in the RSI and it all sort of looking great with the S&P overlaid. But ultimately, the point I was trying to make was actually when it's high, you buy. And so what we may see, now that it has dipped that high, we saw the S&P dipping down and it's now starting to be bought back up. And this has coincided with the VIX coming back down. If this continues to come back down, I would imagine that we will see, I'm not saying we're going to get an immediate all-time high, but just sort of a further continuation of the price up towards that previous all-time high level, and then more than likely a continuation of non-directional volatility, I'm afraid. But that's where we see it. And then the surprise of everything has been gold and silver. I think most people would have assumed that, with what is going on in the Middle East, people wouldn't be interested in risk-on assets. They'll flee to, assets of safety, risk-off assets such as precious metals, and so they'll move into them. But what you forget, actually, is the precious metals, gold and silver, have not been as stable as previous. They have been moving quite aggressively in the last couple of months. And so there's still volatility within that. There's still some uncertainty around what is happening, particularly with silver in terms of its correction. Now, ultimately, it hasn't made a lower low. It has made a lower high, but it hasn't made that lower low yet. And so as long as it's still trading above 74, I suppose, and it did get down pretty close to that today, 77, then there's an opportunity for it to turn around as things start to stabilize, as people start to understand what is going on and what this entails. This start to continue to climb up. Similar with gold in terms of where that's going. I suppose we've thrown a couple of other EMAs. You're getting a little bit of a better picture as to what that's happened. And actually, we can see we're really just talking about this running into the 20, I think that is, EMA, correcting off that as it has done in the past, probably looking for its continuing of that move up. Now, it almost made, it got back to what? 5,400 yesterday, sort of in the futures. That was before the markets opened, and then it looked to correct. But it has just pulled back to a level we would expect to see it at, and it has a relatively good bounce today. Still got another couple of hours until that closes. Silver's gone a little bit lower, but it's still holding above. Let's just double check what this is. Is it the 20 or the 50? It is the 50. There you go. Looking to move. So if you're looking at precious metals, then, I would just be monitoring the levels that it's at. We start to get to sub 73 on silver. I think, you might want to wait and just see how this plays out, because we are going to then be talking about lower lows and lower highs. And then finally, oil. Again, nice strong move up. Obviously, it gapped up off the news, what's happening in the Straits of Hormuz. But got to as high as 78. Someone said that it's 4 or 5p a litre already on the petrol stations in the UK. I actually filled mine up on the weekend, so I've not been there to have a look. Funny that they put the price up on oil that we already have. Not to mention, and the point I suppose here is, yes, obviously there's a lot of oil that is produced in the Middle East, but those that use the Strait of Hormuz and come around, again, I'm no expert. I'm going off what Bijan's posting and what other people are talking about in the wider space. It's China, it's Russia, it's when they leave the Gulf of Oman, typically they used to turn right, head towards the west. Now they're turning left, going towards the Far East. And so actually it is China that is going to be the biggest sufferer of this. And so, you know, it's not lost on me that only, what, a month and a half ago, Trump and the United States went and liberated Venezuela with their large oil supplies. And maybe it's not going to affect them as much as being originally perceived. Now that the dust is settling, maybe we might see some normality there. But it's certainly one to have a look at. I was speaking with Darren on Discord. He's been trading oil. He's been doing quite well in sort of appreciating actually that we're quite high and the price is potentially coming down. I know he's been shorting this on the way down. So well done for those. I don't really trade oil, I'll be honest with you, just because my FXCM account's closed and I haven't got anything else open right now. But anyway, that's kind of where the wider market, I suppose, is. We will have a look at some of these stocks a little bit later on, but kind of a mixed bag, green and red across the board. We talked about the ISM. So let's get into Bitcoin and some charts that we're more familiar with looking at here. And this is where I want to kind of show you that, you know, Bitcoin has done quite well with 12-hour time frame at the moment. Yes, we have been ranging out sideways, and we are at the upper end of that range, you know, that 70,000 level that we kind of talked about. And we can kind of see what's holding us back here as we have the 50 EMA on the 12-hour time frame, that which is the blue line here, and that's pretty much just being able to kick us back. But what I'm liking is that we've actually been able to stay above for the last 36 hours, given all the news that's been coming out, above the 20 EMA. And we're finding some sort of perch on that. And if there was ever a chance for us to take that run to the next level, attacking that 72, which is the top of this liquidation zone here, before we move up to, God willing, 74, this is what we want to see. We want to see is, you know, we don't mind rejections from the 50 EMA as long as we can hold the 20 EMA, which we are doing. We are managing to keep that right now. And so I think, right, brilliant. We'll look on lower timeframes as to how that sees. But there is part of me that then just says the back of my mind, I'm expecting the volatility. The volatility we've had yesterday and today, it's likely that will continue for the rest of the week. And just the fact that we haven't managed to break 70,000, we haven't got out of the north side of this range. I must admit that for me, when we look at vectors and everything else, I do foresee us actually testing the bottom end of this range as well at some stage in the near future. But we've just got to wait for that confirmation before we try and open up any of those trades. In terms of fib levels, again, you know, the 618, the 62,800 or 63,000, it's kind of where we're forming the bottom of this range. We're not going as high as 74 up here just because we've actually got noise at 72. That was the peak we made back in beginning of February. And we've got sort of, I mean, actually, if you look at this, sorry, I've just changed the mean of what we've done. I need to just hide some of this stuff. It's quite a lot of noise right now. Just get rid of the fib as well. But within this range here, actually, the vast majority of the time, we've stayed above this line. We've stayed above 66,000. We've dropped below it for a couple of days, but actually, given that we've been in this area for 4 weeks, 24, 25 of those days have been above 66,000. So, you know, again, as long as we can hold 66,000, that it's looking like a strong line at the moment. Strong support for us. We lose it, that strong support could suddenly become strong resistance. We'll have to wait and see. But yeah, now that I've cleared some of the noise, I think that stands out quite a bit. Just quickly going over some of these, even with the volatility, even with the positive moves that the price has had, we still find ourselves in extreme fear. We were down as low as 5 last week. I know it says 8 there, but trust me, we were down as low as 5. Yesterday was a 10. Today's a 14. I imagine if price closed in and around here, we'll probably stay at a similar level, just because we haven't done amazingly great today, as in we'll still close red, but we could have been a lot worse. We were down at 60,000, 66,000 earlier on. And then you look at it over the past year, and again, just this picture here kind of tells me everything I need to know in terms of just a psychology point of view. I do think the bears are still in control. The fear and greed certainly suggests that that's the way. If you're a long-term advocate of Bitcoin, I'm sure these prices will be great to get in at. If you're trying to squeeze a little bit more out of it, as we're going to have a look at later on, maybe there's an opportunity to have a look there. What I have found quite interesting is leading up to the US and Israel assaulting Iran, BlackRock started buying last week. You know, we had weeks and weeks and weeks of them effectively selling with the odd day of them buying. That's now flipped over the last sort of 7 working days. We've had 2 days of selling. We've had 5 days of buying, and actually we're getting close to around about 3/4, actually just a bit over $750 million from BlackRock alone. And generally the market sells about 1.2 billion over the last 5 days. So certainly the appetite seems to be changing. The narrative seems to be we're getting to a fair value for investors. But as we know, and I do have to sometimes just reiterate this, when price is going down, that's when the smart people are buying, okay? And what is interesting with the Iran stuff breaking is nobody's talking about Jane Street anymore, which I touched on Friday. I didn't really buy it anyway, but it's like people in crypto just assumed that, you know, there wasn't such a thing as market makers, or market makers weren't driving the price, or in other words, manipulating the price. But of course they are. We talk about that all the time. And so when price is falling, they're trying to fill their buy orders, aren't they? That's what they're doing in terms of sending that down. And I think smart money like BlackRock, like institutional investors, they'll just continue to buy. It's getting close to where they bought it, you know, when this thing first started. So ultimately they see some value within there. And if they are looking to hold on to this for 4, 10 years, whatever, buying it at 60,000 or 66,000 is a hell of a lot better than buying it at 120,000, obviously. And they're not afraid to buy into that. It's a new month, so we can start to have a look at where things were. And February, one of the worst Februaries on record. Typically a good month, February for us, but ultimately 15% down on the month. I don't think we can really class March as a victory yet, given that we're already 3 days into it. But the start of this year has not been great. We are down 25%. I watched a video from Ben Cohen. I think the average fall during, he calls them midterm years, because it's always a midterm during the bear market year, because 4-year cycles, is 15%. We're at 25 on this bear cycle. So we are tracking below the mean. However, we are also tracking the mean. So, you know, we're moving up and down in sort of a similar kind of time frame and pattern. We just happen to have fallen harder this time. And we're going to talk about March in a moment. Sorry, I need to have a drink. Okay, so let's start to get, you know, build that picture for where Bitcoin is. And last week we talked about March providing an opportunity for a relief rally. You know, a lot of the indicators, the sentiment is oversold. We're exhausted, you know, sellers, we don't know if sellers are exhausted, but they certainly have been selling a lot. And so we were suggesting that actually maybe there is an opportunity for a relief rally. It's not going to mean, in my mind, that the bear market is over, but with such downward pressure for such a sustained amount of time, it's only a matter of time until the bulls step in. And the weekly time frame here, it doesn't look great. If we hadn't have had this green candle, which is only a day and a half old, remember, all of these reds coming down, it's just been a continuous sell since we had the crossover here. Have I got my colors the wrong way around here? I was going to say it's a def cross, but okay. It's the 20, isn't it? That's why. 20 and the 50. I thought it was the 250. It's the 20 and the 50. I don't know why the 200's not on here. It used to be. Let me just add the 200. Sorry. We'll have it orange. So I think that's what the other one is. Orange inputs. Okay. There we go. So this is the point I was trying to make. We've had that fall down to the 200 EMA. Historically, that's been, you know, sort of a bear market sort of support level. Yes, we've dipped below it, but generally it's where we kind of hug in. And that's similarly what we're having at the moment. We've had that breach towards it, but today or this week, we have re-attacked that level. We haven't managed to close above it yet, but, you know, it's 5 days still to go. And for me, there is still that opportunity for that move to the high 70s, or maybe even sort of like mid 80,000. Why do I say the mid 80,000? Well, the most simplest way of that is it's just this, that level there. Okay. So about 85,000, running up to the previous support. It would also tie in with the 20, and depending on how long it takes to get there, the 50 EMA, before ultimately being rejected. And I was asked this last week. It's the same thing still stands. How or what will it take for me to be convinced that this isn't a bear market? Ultimately, it's a new high. Okay, a weekly close. Hell, I'll take a daily close, higher than I suppose at this stage, 93,000. But that is what it will take. And then there's a big opportunity. So there's a big level to do that. So obviously I would look to get back in before then, even if I just rode that up for a little bit. But that's what I'd need to convince me otherwise. But that doesn't mean that can't happen. And we talked about this before. Previous cycles, we see these rallies, sort of coming down and then rallying back up, but ultimately becoming a lower high, and failing down there. And I still think that this is on the cards. People have talked about March being a month in the bear markets where we do start to see these counter trend rallies up to sort of trap the bulls back in. That was the bottom. Up we go. Max pain is then to just reverse the price on the way back down. So after such sustained falling, it would not surprise me to see that moving up. Ultimately, we've got to break 70,000, 72,000, those two levels. And until we do that, I will not get excited. I will not rebuy any spot until we have convincingly broken 72. And I don't mean got to 82, that convincing. I mean broken it, retested it, built on it, started to move back up. And until then, I'm just going to be happy trading with where we're at there. We move it onto the daily time frame. I think you can kind of see the magnitude of what sort of awaits us in terms of sort of heading up. Okay, we have just got past the 20 EMA, just about, resting on it. Then we've got the 50, and the 200 is going to be getting pretty close to that 85,000 level. But again, we saw it on this previous range where, we ranged sideways, came back down, we finally broke it, and we moved up. And okay, it might have only been by $4,000, but once we get past 72, 4 or 5 grand is going to get us to those high 70s we were talking about anyway. So, they're the kind of opportunities that we're looking at and just waiting to see where it comes from. So, yes, I could see that. Does what is happening in the Middle East, reduce the opportunity for that happening? I actually say no, not necessarily. Show me the charts and I'll tell you the news type theory there. But what would be the best? What does Joe Public think is going to happen, and what is the best move for market makers to then do? And I'll let you figure that one out as a little bit of homework, but a little bit of a clue is that. So that's where we sit with this one. Now, I haven't really touched on any news, but the one thing I get asked probably more than anything else in the DMs is, how low do you see this bear? Well, how are you going to convince yourself we're not in a bear? I'm sticking with the 4-year cycle. And how low do you think we can go? So I'm trying to, I have seen some of the things you're putting in the chat. I will get to them, I promise you. And articles like this, I kind of laugh at them at the same time, but I check them out because I feel like, things like death costs are talked about quite a lot. Some play out, some don't. But it gives an interesting, when someone starts talking about not just a piece of TA coming up, but then tying that back to how that's played out in previous cycles, it's going to get me interested, because if the 4-year cycle is a thing, anything that's cyclical within that is kind of a thing as well. And so I thought we'd take a look and just try and have an opportunity. Ignore that little fibs and bars. That's just for me to add something to it in a minute. I just didn't want to clutter everything later on. So the article is talking about the death cost. The death cost, for those of you that aren't aware, I'm sure every one of you is when the 50 and the 50 EMA, which in this instance is the blue line, crosses below the 200 EMA, which in this instance is the red line. Remember, this is the 3-day time frame. Okay, and that cross has just happened. Now, typically, death crosses, we've talked about in the past that actually death crosses tie into to marking the bottom of moves, but that's when we were talking about on the daily time frame. the 3-day time frame, obviously it takes a little bit longer to play out, and maybe the strength of the def cost is increased somewhat. So we can have a look at what has happened in the past with previous def costs. So we had a def cost back in June of 2022. Here we go. What do we see? An immediate fall away. Okay. We had a def cost back in 2018, and we had it'd already fallen, but we had a bit more of a continuation sort of down here, this bit. So what was that, from 4,100 to 3,100? So still a 25% drop. So still fairly sizable. Then in 2014 bear market, it occurred right at the end, but it just so happened to tie. Oops, that's not a very good example. With this fall down here, which went from basically 340 down to, what was a 50% drop. So, a fairly sizable drop within that. They worked out in the article, but it's an average of around about 35%. And so, I'm not saying it's going to happen tomorrow, but what we're saying is there is still significant downward pressure within there. Tie that in with bearish rectangle, bearish pennant, whatever you want to call it. The fact that we've still got more falling to come just within the 4-year cycle and within the bear market, we can try and draw a picture of where this may go. So we take a price from where we currently find ourselves. No, we don't, because that's not the right one. Get there in the end. And we draw that average of 35%. Takes you around about 44,000. And I think that's quite an important level. I talked about this before, sort of 40 to 45,000 being a level I can conceivably see price going down towards. May not be the bottom, but I think that is an area of interest. It ties back to just the price of what Bitcoin was when the ETF started. And I feel like there genuinely is some poetry within just bringing that price all the way back down towards that. But if we actually have a look at, sort of overlaying some other elements within there. So, I love a fib. And so we throw this fib on from here. So this is market bottom 2022 to market top in 2025. And look, the 0.5 fib level, 45,000. So, fairly close to the 44,000 we were just talking about there, give or take a little bit of wiggle room in terms of where we're going to start things and wicks and everything else. There's something there that's kind of tying in quite nicely. Okay, so, that range, I'm going to draw a little box to the side, actually, I think, and then we can take some stuff off. But 45,000 to 40, we'll just call it 43,000. Okay, so that's that element there. Close that, get rid of that. We'll move that. And then I did this last week, so it's no surprise. But if we just have a look, it's never a mirror image, but it does rhyme. So we take the power pattern, we overlay this from the top to the bottom. Yeah, and then I am going to just tidy it up to get this in here. And you might say I've cheated a little bit there, but I literally moved it by 2,000 just so we could get this. Oops, let's get rid of this bit and this bit. And if you don't like it, I'll tell you what, let's just leave it. I'll take it all the way back. Now I'll get rid of this. So this takes the bottom to around about 39,000 with that final drop off from the FTX. But you can kind of see this main base of the bottom that we had previously. Oops, where's my brush? Here. And the base of that just so happens to tie in 43,000. And whilst on the last time I did this, but someone might think I was, cheating a little bit there, I did move this up just to sort of try and tie in this move up, which was a rejection of the 50 EMA and the 20 EMA, similar to what we saw back in January. That takes it to that 43. So again, starting to build that picture. Then actually 40,000 to 45,000. It really is starting to feel like there's a few things that are tying in there. Oops, let's get rid of that. When we start to move across to look at some other levels, I think we can actually say there's a genuine call for it. Is it on this one? Sorry. Lost my charts, which had it on. Lost the chart. I don't know where it's gone. Okay, sorry there. We'll have to just leave that one. And so what we're looking at in this chart here, and then I'll come and have a look at some of the questions there. But what we've got is we've got the previous bear markets. Okay, so the yellow is 2022, the blue is 2018, and the red is 2014. Now they're all the same length. Okay, so they're all been taken off this chart. I've not enlarged them. I've not pulled them out to any side, and I've lined them up with where the top was from 2025. So you can all see that within a day, 2 days, they all finish at the same. We're kind of thinking end of September, early October 2024 for the 4-year cycle. Fine. But what I'm really trying to just sort of get the picture of here is just, I mentioned it earlier, you know, Bitcoin has fallen 25%. It's 10% greater than the mean average. But what we can still see is, you know, I'm going to have to do this white, otherwise it's going to be really confusing. We can just see the direction, you know, sort of everything starts moving down, as you would expect within the bear market. Get these flat periods here. Okay, maybe not so much on this one. Sort of this flat kind of period here. But the point is, the next step up, once we've had that, is sort of this move up. And the reason I mention this is historically, that move up's kind of been associated with sort of March, April kind of time. And it's kind of where we're tying in at the moment, tying back to, we've had such sustained falling. We had that in the previous 3-4 year cycles, if that makes sense, or 3 bear markets. That after 4 months of just general downtrend, we get that exhaustion. Okay, it doesn't mean that the bear market is over, but we start to see, someone's ringing me. It's like they don't know I'm doing something at the moment. We start to see those moves back up, and I think the point that we're trying to make here is they all kind of started similar times on the previous cycles, within a week of each other. And the argument could be had that actually this move started when we hit 60,000 down here. We're currently at 68, but we've still got opportunity for that move there. But the point being that on each of the previous cycles, we never made that higher high. Okay, we came close on a lot of them, but ultimately it was just a series of lower highs and lower lows. And so whatever this move up here may be, unless it gets above 97,000 on the daily, then we should always, I truly believe that the safest or more prudent position to have yourself at the moment is we will continue to be in a bear market. So whatever rally we make up, it's likely going to lead to a lower low. That's the point, isn't it? So however high we end up going, unless we get past 96,000, once we turn, it is also likely that we will end up going lower than the base at the moment, which we find ourselves at 60K. Okay, so the point with that is, if for those of you that haven't left the market but are worried or want to do that, just bear that in mind. Okay, you could even say, right, well, 68, because I don't believe that the bear market is over. It's unlikely that we will spend the next 6 months just going between 62,000 and 68,000 or 72,000, whichever level you want to choose. We're likely, in my opinion, to, because that's what we've done in previous cycles, to continue heading downwards. And so because of that, you could argue, well, I could get out now and just accept that we might be able to upturn. I would say, if you're not already out though, wait to see what's happening, you know, wait to see if we can break that 72. And then once we do, if we then fail at another point, 85,000, 80,000, whatever it is, know that actually there's a good chance here that we're going to form that lower low, just like what we did here, which is how I went out at 94. We had that rejection. The mentality is we're in a bear market. Lower lows are expected. We get out and we move out on the way down. And that's as simple as it has been. How long it then takes for us to sort of find that next drop down, I honestly don't know. You know, this one here, I suppose, end of March. End of March, we had a drop here. We kind of lost the high. This was more of a sustain, but I suppose it started towards the end of March in previous cycles. So yeah, maybe we have a 4 weeks more of either ranging or moving upwards. I think you just need to monitor that. I'm not necessarily too worried about the timings on the way there. I'm just more worried about what this time frame is. at the end. 4-year cycle, end of September, beginning of October. Anyway, right, let's have a look. South Korea and Japan are huge opponents too. I think Japan, it's talking about oil, only has enough oil to last 280 days. China also getting huge discounts. Yeah, something like 90%, I heard. Japan's stock market tanked 5% today. I did see that, probably because you posted it. I think that's due to oil concerns. I think you're right. Again, the fact of the matter is the Straits of Hormuz are effectively closed, whether that be because of burning oil rigs or the fact that no one's ensuring these oil tankers to actually transit the area. So everyone's just dropping anchor instead. And that's going to create uncertainty, which then leads to volatility, which is what we're seeing in the Far East markets. Reese, I was going to ask what your thoughts on selling at 88,000 into a relief rally and then sit out for the year. Reese, there you go. That's the thoughts. If you can get that high, then I think, yeah. I would honestly, though, as I say, just going back to that point, I think having a figure in your head is dangerous. I think you just have the mentality of, I'm going to wait for a rally and then I'm going to sell at the time of weakness. Because you say 88, what happens if it only gets to 85? What happens if it only gets to 84? You miss that opportunity. You wait for the weakness. Once it drops, you accept you were never going to get the top. Say it hits 84. Once it gets back down to 80 or whatever, and it's coming back down, that's when you sell, and you just lose that chunk. But generally, it's a good position. And the other reason why that's a good position, if you can get out sell in the mid 80s, even if it goes higher to the early 90s, unless it breaks 96, at some stage it's going to come back down and it's going to break that low. And I have such a strong conviction that the 60,000 is not the bottom. In terms of duration we've got, in terms of just repeating patterns, everything else suggests that actually we have got further down to fall. So that's where I sit with it. Bijan, we had new all-time highs in the Tel Aviv stock market straight after Jerusalem. Tel Aviv got bombed to the Stone Age. Okay, well, there you go. Probably all underground. Right. Let's just get into the day things. I want to talk about Pippin, because Pippin has fallen 30% today. For someone that shorted it, I don't have that big a smile on my face, and we'll talk about that in a moment. But here we are, the daily time frame, a lot of EMAs, RSI down at the bottom. The RSI kind of just paints the picture. We're in no man's territory. We could go up, we could go down. So there's nothing really there signaling that there's any problem with the increase, the rallies that we're seeing. And in terms of daily, this is the 4 hour, apologies. Let's go on to the daily. Sorry there. And in terms of the daily time frame, as I already alluded to, we're sort of battling that 20 EMA at the moment. I'm not necessarily too bothered about that low test. The fact of the matter is we stay within that range. And we can see to the north, we do have these vectors up there. A lot of them are much higher than I'm really looking at right now. I'm looking at this vector, which is sort of straddling the 50 EMA as an area to go. 50 EMAs are actually sitting at 74, which is an interesting thing because we haven't touched the 50 EMA since, mid-January. So, there's an argument to say that when we get that rally back up, we would expect it to come at least to the 50 EMA. Breaking that 72, maybe getting excited there. So, again, just basic kind of 101s of what you'd be looking at. There's your 72 level. If price moved up towards a 50 EMA, you don't just go, right, I'm going straight in. You wait to see what happens. It either busts through it, and it will likely come back and retest 50 EMA, and up it goes. Rejects from it, but holds 72. It's another opportunity to get in down there. So there's ways of playing that, although obviously we'll drop down to lower time frames when we get there. But that vector candle certainly is looking good. And in the last, you think about it, this here was Tuesday. Just to sort of, here we go, start new. We talk about it all the time, and I feel like sometimes I'm boring you to death. But when we're ranging, we take out vector candles. So that was Tuesday, red vector candle. We knew we'd take it out, and then we fast forward, or we just get rid of the replay. The very next candle is this green get vector candle. Guess what? That needs to then be taken out. Wait a couple of days. This blue vector candle came all the way through, takes it out. Next day, that gets taken out. This one here sets today, not quite all of it. So we've left a little bit of this vector down here. We stay below 70,000. I truly believe that 66,000 vector remaining is going to get taken out. So we can kind of use that as a yardstick of where things are going. So remember that The vector candles is representing trapped liquidity. Okay, so people buying at a greater volume at that price than they have previously. Market makers like to hunt for trapped liquidity. So that's where we are on the daily. We've kind of talked about that from the 4-hour time frame. Oops. Let's get rid of that. Let's get rid of that. Let's get that. So we are above the 50 EMA. We've been above the 50 EMA. We've been at very similar positions above the 50 EMA before. We kind of just oscillate like a wave in which we're doing that. But a bit like what I said with BitTense at the beginning, at least we're making, I mean, this is pretty much bang even. It's ever so slightly above by about $1. We are making higher highs and higher lows, even within this ranging pattern. We are getting squeezed a bit though. So there is a concern there. But you can see that for me, even if we did make that move up, we've got the 200 EMA at around about 71,000, top of the range there. We get a rejection from that. I think that's an ideal opportunity to at least open a short and just see where that comes. And then down, we talked about this vector candle here, leaving something at 66. When we get down the 4-hour, we actually see we have vector candles down to around about 64,000. And I think any rejection here, this is where I would be targeting. If we did have a short entry here, this is the area I'd be targeting to close my short, with probably some take profits along the way. So that's something just to bear in mind. But the 4-hour moving sideways, difficult to really do anything on that right now. I'd just be waiting and see. I think earlier on today, we might have had an ideal opportunity, with a sort of basically a retest of the 50 EMA and a move back up. You can kind of see it's sort of stalled a little bit since that move. So something to mind there. I don't think there's anything on the 1-hour I really need to talk about. Not particularly. And the 800's in a similar position. We've got a few more vectors here, but they're not new levels that we're talking about. Still 66 and then I suppose 65, but okay. And the RSI is fine. Let's get on to BitTensor. Again, I don't know how subnets are doing, but I'll just give you my views on what BitTensor has been doing. And yeah, so where was it? Here we go. Tuesday, we were at 170. We're now sitting at 180. So actually a 5% increase on where we are. But what has it really done? Yes, we have formed higher highs and a higher low, but the 50 EMA looming over us, and we've not managed to break that. So I really need to see, we've got plenty of room on the RSI. I really need to see BitTensor make that move above. It's now sitting at 200 flat. Got to break above it. Come on. And getting above there, we've got a real chance of taking on some of these clouds up here, but we've really got to show some strength to get through this. We managed it before, but couldn't get out of the cloud. And so if we do get above 200, really it's this wick here that we would be looking at, which actually there's a smidgen of a vector there. If you zoom in, you can just see it. But we'd be saying, right, the cloud there basically ends at 213. There's a vector there as well. We've got to not only stay above the 50 EMA, we've got to clear that level there. Otherwise, for me, I'm sorry to say it, it's a continuation of an overall downtrend, which has been unrelenting. And we haven't, as well as that has done from the bottom of 145, we've kind of stalled a little bit over the last 7 days. Maybe I'm just cursing it there and it's going to rocket to 300. And I hope that does for you lot. But it is stalling a little bit. It's stalling below the 50 EMA. It's kind of building support on the 10 and the 50. But we've got to really see this. I want to see green vector candle breaking it through. Daily time frame would be fantastic. And then in terms of the 4-hour time frame, yeah, I think it looks a little bit better. It's progressive growth. That's what we always want. But now we start to see 4-hour time frame, 200 EMA, and this thing has held us in the past quite hard, and it's done exactly the same. I mean, look at this one. This is it. Sold right the way back down to close below this level, and then we've not managed to recover it. So now we're looking at sort of what 190-ish. And again, yeah, we may nip above it, but we've got to close above that one. And until we do that, there are vectors down here, that same kind of rationale from Bitcoin. I expect to see it's kind of close. So yeah, so that's kind of where that is. Pippin, let's talk about Pippin, because as I said, the guy's been shorting Pippin since 70 cents. I don't have as big a smile on my face as I thought I was going to, because ultimately This is where how I trade catches me out. And I close my trade. And now all I can see is missed opportunity. And I honestly, if there's any sort of anyone out there that thinks that I am an emotionless machine when it comes to trading, let me just prove that narrative wrong right now. Because all I see at the moment is not the gain I made. Leeds have just scored. Missed the goal, but Leeds have scored. Not the gains that I made in that initial trade from 70 down to about 54. Now all I actually see is what I could have made from 54 to 40, and every fiber of my body is like screaming, just get back in. This thing's just going to go low. It's absolutely tanking, and I have to take a break and be like, no, don't. And so when I see it at 52, and I'm like, I should get back in. I'm not going to. 48. Oh, I could have made an extra couple of $100 there. Oh, even worse, it's 46. Trust me, it plays on me. But the reality of it is, this move, especially on the other side, I actually believe that Pippin is likely going to recover this vector candle now, 30 cents, maybe get as far down as the 200 EMA like it's done down here. That's probably the right move. But it's too overextended for me to just launch a trade back in there. The setup isn't there for me right now, because when you go down these lower time frames, I mean, even on the 4 hour, incredibly, it's already down at 25. It is oversold. We've got red vector candles behind us. Retest of the 10 EMA would be a 25% move from where we currently find ourselves. I mean, that is going to wipe you out. Even if you did a 4x trade. The goal got ruled out for whatever reason. Never mind. Right. But on the 1 hour, it's even more abysmal. I mean, we're like 12 on the RSI. Something is telling me that this is screaming for a pullback. So I am waiting. Okay. As painful as it's going to be, maybe I try and take a long, although, because, let's face it, it's down this low. I feel that the test of the 50 EMA is probably on the cards, because there's just such a springboard to come back up. So maybe there's an opportunity for the long. It's just hard to find that entry. And then we'll just see where it continues. And this is why I like having the RSI on the charts. I know for a few months I didn't do it, but actually it just helps me stabilize the noise. And as you can kind of see, so if I was thinking we were going to bounce around here, so I just kept on moving my stop, and then I ended up getting stopped out. And we started moving into here, and all the time I wanted to get into another short, I was just saying, no, this is just too oversold. Okay, it fell hard. And then sometimes you just have to accept some of the trades get away from you. That's the reality of it. And I'll just take that one, unfortunately, on the chin. In a similar vein, and I warned you all, I longed, it's back here, it was Sunday night, wasn't it? I tried a long on silver, and I got out of it because it was not going the right way. I've now entered the short. The stop's actually a bit further down. So it's about here. So this is just for when it's on another screen. I just try and monitor where it is. And it's just a case of knowing when the trade is not going against you. Don't hold on to it for the sake of stubbornness. If you're looking at the trade every 5 minutes, hoping it's turning around, it's time to cut it loose and just accept it, okay? Because 9 times out of 10, you will not lose any more money. It's the right decision. You just need to put on your big boy pants, big girl pants, and actually do it. Of course, there's the odd one where it totally V-reverses and you could have stayed where you were and made some money. But for me, it's just a case of just cut your losses. This one just didn't work. And I was the same. What was my actual logic of moving in? There was a conflict that started over the weekend. Everyone's going to rush to gold. There was no TA to it. It was a fundamental trade, and it just didn't pan out. Let's cut it and let's move on. So that's sort of just a better way of looking at it. But yeah, these ones do hurt when they miss, or they don't miss, they continue. But I'm sure tomorrow when I wake up and I'm not staring at the charts for 8 hours, it won't feel as bad. And just hopefully I'll find a new entry for it. Anyway, let's have a look. We'll just daily go through some of the others. The same picture. It doesn't, I'm not a fan of where altcoins sit at the moment. None's really outperforming, except for down with Pippin at the moment. BNB, it's forming that rectangle, ranging sideways. Dash, I mean, ranging sideways. I'm not sure why Dash is so much chance. Let's get rid of it. Ethereum, ranging sideways, okay? It's not above the 20 EMA like Bitcoin is, but it's still ranging in that sideways motion. My view is that, again, got to get above the 50 EMA. It's 2000, it was 2,400 before, it's 2,300 now. And I'll take the 2,200. I can't remember why we drew that line. Casper, ranging sideways, but being dictated down by the 10 and the 20 EMA. Link's doing the same. I'll tell you one that is outperforming. It's near. Broken with a 50, with daily candle, with a green vector candle through the 50 EMA. Nice. I don't know what's moving it, but this one is moving. I missed the move. But yeah, anyone that is in near, well done for that one, or long in it, whatever. Kind of running into a little bit of previous support and resistance at the moment. So maybe we might sort of see some pullback. We're getting close to overbought territory as well. But even if it came back down and can hold sort of that 120 level, a very solid move on near. Solana moving sideways like everything else was. SPX doing the same. You get the picture, and it's why we don't need to go through. When's it time to go into subnets? I tell you what, I'll go in all in on subnets when you go all in on subnets. Don't hold me to that, but it's as good a time as any. And Zcash, yeah, not looking great. Now Sunderland have gone and scored. It's not been a good couple of minutes for me not looking at the tally. In terms of sort of everything else from within it, BTC, ETH BTC, a similar picture, but I don't think it looks particularly good. We're in a bear market. I don't expect alts to outperform Bitcoin on the whole. And so I would expect ETH BTC to fall. When we look at some of the others BTC, this is actually still climbing up. I'm not sure why. I said I'd look into it and I didn't. Yeah, I'll have to look into that. That one is confusing. I don't know if I've set it backwards. I'll have to have a look into that one. Others dominance. That's dominance, sorry. Others is what we're looking at here. I mean, big picture for me, just, I drew this on Friday. I know it's white on white. Let's get rid of that and that and that. You get the picture of not only was there a head and shoulders, but we've probably broken the neckline, even if you put that neckline there. And to me, the bear market's probably going to take that down to there. That'd be my view on how far that could potentially go, which is another 50, well, maybe not quite 50, but a sort of 35 to 40% fall, which is kind of levels we were talking about with Bitcoin, to be fair. Tether doing its thing, but Tether dominance, it's come down from the 9%, which was historically high. It was almost an all-time high. And you think how much more Tether there is floating around versus back in 2022. It's impressive for it to get up to there. In terms of some of the other ones that caught my eye, just Circle, not sure why, but it's absolutely rallying. So I'll take it. Palantir, obviously, kind of I did sell at 134. Ever so slightly, I mean, not much better. But the war happened. It's a defense stock, really, or I'd call it a defense stock, I suppose, intelligence and everything else. So this is done quite well at the moment. Need to reevaluate that. We'll have to have a look. Everything else is generally coming down a little bit. Things are nervously trying to sort of understand what's happening with the market. Astrid's obviously up a bit, but it's a very illiquid market from what I understand there. But generally things are heading down. So that's kind of it at the moment for me. 5 minutes longer than I wanted to. I don't, I'm not going to stand here and pretend that we know what's really going on, how long this is going to take, and how it's going to impact the market. All we can really do is just sort of keep an eye on things. I still expect the volatility to play out for the rest of this week as we really get, I mean, it's only been 4 days, okay? These conflicts, we need to understand sort of the time frame that we're really talking about, and actually what the end goal is. I'm not really too sure in my head when we're getting what's the tick to get the mission accomplished banner. out. So that needs to kind of sort of be sort of understood. And once the markets can understand that, they can then start to react a little bit more directionally, I suppose. But nothing for me has really changed. Yes, the conflict is going on, but in terms of, I still think we are bearish. I also still think we will get that sort of drop down in the stock markets at some stage, and maybe this will be the catalyst that ultimately leads to doing that, and then we'll get that recovery out with interest rates dropping, money printers turn on, blah blah blah. The 4-year cycle continues type thing. So that's kind of where it sits at the moment. I believe we've got a trading pub on Thursday. It'll be the first one in a few weeks, I think. So it'll be interesting to see where it takes off from that. But I'll obviously get a bit of an understanding of what subnets are doing because I don't follow them myself. We'll have another charting call on Friday. I do need to keep that short. It's wife's birthday on Friday. So sure, we've got things to do there. But I will be here Friday morning to go through that. Please, if you've got any questions that you don't want to ask in Discord, feel free to message me. I've been chatting, helping, discussing a lot of things with people in the group at the moment. And, I enjoy it in terms of at least having a correspondence with you guys and just, I suppose I don't think I really give any direct, you have to do this, but just trying to help people come to the decision of whatever it is they're looking to achieve. So please feel free to message on that. Other than that, enjoy the rest of your week. Enjoy the rest of your trading and everything else. And if I don't speak to you beforehand, I will see you on either Thursday or Friday. And I'll speak to you all soon. Cheers now.